All right, the recording's started. So we're going to go ahead and I'm going to introduce Chantel. She is going to be talking about budgeting and financial statements. I'm going to allow her to do her own introductions. Juan, you may want to have a pre-introduction since I know that she's been a part of previous cohorts, which is awesome. So we'll go ahead and start there.
Well, Chantel, thank you so much for coming to Knowmpreneurs Cohort 3. Chantel's been with us since the first cohort. She's been collaborating with Known, and she's been a very, very, down to earth, hands-on, roll up the sleeve kind of coach. I like her classes. It's a very pragmatic. It's really. She goes down to the very step-by-step process of what's really, really important for an entrepreneur. So because of her practicality and really common sense, I love her class so much for you. We all know that you're entrepreneurs and you're at different businesses and at different stages. And Chantel will be able to work with you at different stages in the process. So make sure you ask all your questions about your tools, about the things that you really need to measure. This is a class where you want to really get your hands around your numbers and really understand how to really make the right projections and all that. Please, try to get the most out of this class. Chantel, thank you so much. Welcome.
Of course. Thank you so much for having me back, Juan. Thank you. Knowmpreneurs is so exciting. I'm very excited to be here this morning. I do thoroughly enjoy giving these presentations and working with the Knowmpreneurs and answering all the questions and even helping you, hopefully, if we have time, work through some of the challenges that you've been facing while managing your finances. So I'm going to share my screen and go through my spiel of thoroughly introducing myself, but if you give me 1 second, let's see. Can everyone see my screen? Everyone's good? Yes. Thumbs up, thumbs up.
Yes.
Great. All right, so again, Chantel Garcia, and today I'm going to be talking to you about budgeting and financial reporting. I am the owner and founder of Innovative Consulting and Solutions. I partner with executives, entrepreneurs, and nonprofit leaders to help them manage their business finances. So today we're going to go over what's entailed in managing your business finances. And so a lot of people, not a lot of people, but entrepreneurs or just business leaders think that, okay, if I check my bank account and file my taxes, I am managing my finances, when that's not it, right? There's a lot more entailed in it, and we're going to go over that today. So we're going to talk about budgeting, we're going to talk about bookkeeping, we're going to talk about financial reporting and tax filing, and then I'm going to open up the floor for some questions and answers. We also are going to do an in-class activity, which we did the last cohort, and we had a great time doing, but we will get there when the time comes. So and I am the owner principal of ICS. I have over 13 years of professional accounting experience. I started my career as a bookkeeper working for an auto body shop. And my last role was a CFO of Neighborhood Music School. I was there for about 5 years. I oversaw IT, HR, finance, operations, facilities, oversaw capital improvements, and even helped them start a middle school called Atlas there. I was the first Black woman to sit on their leadership team, and the organization has been around for over 100 years. So that was a huge accomplishment for me. Fun fact, I lived and taught English in Costa Rica, and I started a clothing line when I was 19 years old. So that was exciting as well. All right, so let's jump into it. I try to keep this exciting as much as possible because no one wants to talk about finances. But I like talking about finances because I geek out on that, the numbers and everything else and charts. So, but I promise you we're going to have fun, and you're going to learn a lot, take away a lot today. So again, managing your business finances. I really look at it in 4 different buckets. And the first is budgeting, coming up with your plan for your business. The second part is bookkeeping, making sure you're collecting data, organizing it so you can compare it to the plan that you created. Financial reporting, so this way you can generate those reports again based on the data that you compiled while you were bookkeeping, so you can compare to that budget. And then using that same financial report to file your taxes at the end of the year or any other filings that you have to complete. So again, budget. So it's creating an annual budget to manage your finances and to track your organization's financial goals. So for instance, if you know the following year that you want to, let's say, move into a new office, and you have to think about, well, what are the costs associated with moving into that office? Do I have to staff it, right? Do I need a receptionist? Now I need office supplies. I have to pay utilities, all those different things. How much money do I need to bring in order to achieve that goal of moving into a space? Well, you're going to use a budget to really map out how to accomplish that. So that budget is truly capturing all of your targeted goals and you developing a plan with costs, right? With numbers to it on how you're going to achieve that. So that's the very first starting point to managing your finances, because to avoid walking in blindly, right? You want to be able to have a financial plan that you can follow that'll help you meet your targeted goals. Bookkeeping, again, tracking your income and expenses, reconciling your bank accounts and your credit card accounts and even your loan accounts monthly. Managing a month-end close, so meaning going through that reconciliation process, reviewing your financial numbers, making sure they're hitting all the correct buckets, even accounting for things that you, expenses that you purchased using your own personal funds, recording those as business expenses, right? So you can take that deduction at the end of the year. Ensuring that you've sent out all of your invoices to your clients and that they've actually paid you. Reconciling your books, just balancing them to make sure everything is where they need to be in the correct bucket, and you're dotting your I's and you're crossing your T's. And then a part of that is storing the pertinent information. So storing your documentations either in a filing cabinet or online in a cloud. Financial reporting. So reviewing your income against the expenses against the budget that you created, which is called a budget versus actual. So where are you in your financial plan? So you created that budget, but where are you in that process? And then you can also use, again, those financial reports for the tax filings or to complete grant applications. If you are looking for some funding, you would submit those financials to a lender. And again, tax filings. So I saw, based on the demographics list that Juan sent me, there were a mixture of different businesses. From what I can see, there were a few LLCs, but obviously what I can't see is who's filing as an S corp, but we will get into that part later on the difference between the two of them. And then with the in-class activity, we'll run some numbers based on those two different types of businesses. So again, budgeting, setting your targeted goals. So I don't know if you all are gonna go through this with one of the presentations, but really going through like SMART goals, thinking about the type of goals that you want to set for your business, making sure that they are achievable and you can actually reach them and they're realistic, right? So the example that I used was moving into an office space. Another example for you could be, I want to hire a full-time staff. What does that look like? How do I even get there? You want to be able to really sit down in front of a spreadsheet and actually map out and put these numbers down, but they're going to be based on the goals that you're trying to achieve. So you want to think of your budget as like a GPS, right? When you go in your car and you know that you want your destination, let's say, I always use food as an example. My destination is Soda Cuba downtown, right? I need to know how to get there. The goal is to get to Soda Cuba and get some oxtails. How do I get there, right? So you're going to punch the address, the destination into your GPS, and it's going to map out the route on how you get there. You want to think of your budget the same way, right? I know what my targeted goal is, but how do I get there? What are the steps that I need to take in order to reach my targeted goal, to get to my destination? So at times we look at large goals and we're like, it's too intimidating, it's too scary and hairy, which is actually a good thing. But you want to be able to break it down in bite sizes and say, okay, well, what's the first step that I need to tap? And what's the second? What's the third? And then what are the financial implications, right, to taking those steps? So again, I use the example of hiring a staff. Well, how much am I going to pay that person hourly? How many hours per week are they going to work for me? What are the taxes associated with that? What's the workers' compensation, insurance that I have to pay for that? What's the payroll processing fees, for the platform that I'm going to use, whether it be Gusto or something like that. So those are all the different things that you want to think through as a part of reaching that targeted goal. And you want to be able to map that out in your budget. You want to make sure you use a budget so this way you're proactive and not reactive. So I did a series with Barb Nangle last year, and we talked about a budget being really a tool to set a boundary around your business, right? So if you are clear on the goals that you are trying to achieve for the year, you're going to stay on your plan or on your route and focus on those targeted goals. If someone approaches you about a business opportunity, right, you're going to say, well, have to make a decision whether you're going to entertain it or decline it, or maybe say, not at this moment, later on. And really what you want to look at is, how does that opportunity fit in with my overall goal for the year that I'm in? Does it actually help me achieve my goals? Would it actually, put me make a detour, and I have to go off track? Like looking at all of those different things. So this way you are always staying on track if you have your budget. And again, you'll know whether or not you can entertain certain opportunities that come your way. So you always want to refer to your budget, again, your financial plan. It'll ensure that you are proactive and not reactive. So if you're looking at your budgets, your actuals versus your budget, and see that, okay, first quarter, I was supposed to bring in $5,000. I'm only at $2,500. What happened, right? It'll prompt you to adjust accordingly. Okay, well, wait a second, right? Why are we short 2,500? Was it that we didn't push hard on marketing? We didn't do good, we dropped the ball somewhere, in our lead generate, like what happened, right? So it'll prompt you to really take a look at your systems, take a look at what efforts you've been making and what's working and what's not working. So again, a budget is very important for that, to really ensure that, okay, well, if I'm not on course and I do need to tweak something, I'm doing it in a timely manner. So this way I'm not repeating this mistake throughout the end of the year, and I really won't achieve my goals, right? So that's another way to use the budget and really take like a temperature check and a pulse, right? How are we doing? Where are we at? Reactive is when you're not checking your budget and not checking in on your targeted goals, and you're kind of just flying by the seat of your pants and just spending money, just kind of just going with it, right? Like, I'm busy, I just need to run my business, I have money in my bank account, I got to go, 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 go. I have to entertain all these opportunities, I have to do these presentations, I have to do all these things. And the end of the year comes and it's like, oh, what was that budget that I created at the beginning of the year? Oh, right, I was supposed to bring in like $50,000 in this revenue bucket. Oh, I only brought in 25,000. What the heck happened? At this point, it's a whole year has passed, right? Because you've been going, as you know, as an entrepreneur, you're just going, right? Time is just flying. But you really have to take a moment to really check in with your business and what you're doing to ensure that every opportunity that you are entertaining is aligned with that budget, and to ensure that every effort that you're putting in and every investment that you're making, you're seeing your return on it. This budget is also going to help you determine how much money you need to make. So if, again, using the office as an example, if you know it's going to cost you about $20,000 annually to move into an office and to maintain it. Again, utilities, office supplies, even utilities, office supplies, the postage machine, a copier machine, all those different things. All right, well, I know I need to bring in $20,000. I need to make sure that I'm bringing in enough money to cover that expenditure in addition to everything else, right? So it's a piece of the pie. Pulling these pieces together to really get a sense of how much money you need to bring in. And again, it'll help you make financial decisions. You'll know whether or not you can afford to buy a whole copier machine or if you should lease it, right? It's much more advantageous for me to lease a machine than to actually purchase a brand new one. Or I may just have to settle for a desktop copier or a 3-in-1 on my desk for now until I can afford something a bit more robust, right? you're going to use your guide, your budget to really help you make those decisions to see what your budgetary restraints are or what you have room to do. So budgeting, right? So when we put together the budget, everyone says, well, where do you start? What do you do? What's entailed in the budget, right? What it kind of looks like it looks like your financial report. You have your revenue, your direct expenses, your gross profit margin, operating expenses, and net profit. And all of that just sound like a whole bunch of words like blah, 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 that I just said at you, right? Like, what are you talking about yourself? So the first part is revenue, right? We know that as income. So we provide a service and we are paid, right? That's revenue. So that service could be, let's say I'm a consultant. I also am an accountant. I offer accounting services, those different types of things. I don't necessarily sell a product like a bottle of lotion or hand sanitizer. I actually provide a service and someone pays me. Another way to generate revenue is through sales. Again, you have an actual tangible product that you are selling to someone. They pay you, and in exchange, you give them a piece of good, right? So those are two examples of revenue. Direct expenses. Direct expenses are the costs directly associated with you generating that revenue. So for instance, if you are selling a product person, let's say, the cost, and I'm just gonna use my hand sanitizers right here. Let's say, for instance, you sell hand sanitizers, you have to pay for the bottle, right? And you have to fill in the bottle with the hand sanitizer that you're creating. It may have a nice scent or whatnot, and you have to pay for the cap. The cost of creating this bottle or this good, right? Or preparing this hand sanitizer are the direct costs, because in turn, I'm going to then sell this to my customer and get revenue for it. So I have to pay for this bottle. I have to pay for labor to fill the bottle and to assemble it. And then in exchange, I'm going to receive revenue for it from my customers. That's direct expenses, also known as costs of goods sold. If you are a service provider, your direct expenses are called cost of service. So the cost, say for instance, if I know there's a few hairstylists in here, if you're a hairstylist, your direct or your cost of service is going to be labor and a combination of cost of goods. Because you have, for your cost of service, you have your labor, you're washing your hair, you're blow drying, all those good things. And then the cost of goods sold, you're using shampoo, your supplies, the conditioner, relaxer, all those different things, right? Those are all direct expenses, because then at the end of the day, once you've put in that time and once you've used those products, in return, someone's going to pay you for that service, right? That's how you generate the revenue. Your revenue minus your direct expenses is your gross profit margin. So you may have heard this term gross profit margin before. Someone say, well, what's your margin, right? When they're asking you about your numbers in your business, well, what does your margin look like? That's the margin that they're referring to, your gross profit margin. They want to know, how much money do you need to spend in order to generate revenue? So I need to spend, throwing out numbers, I need to spend $50,000 in order to generate $100,000. My margin is 50%, because 50,000 is half of $100,000. Okay. This number is very important because, and I also like to make the disclaimer that the gross profit margin varies depending on your industry, right? So one person's profit margin could be 20%, and it could be really good for the industry that they're in. Someone else's could be 50%, which could be very low for the industry that they're in. It varies. So I think taking the time to really study and doing your research to see where your margin needs to be will help you determine whether you need to bring in more revenue by hiking up your prices or cut your direct costs by either decreasing your labor or decreasing the amount of supplies and goods that you're using to generate your revenue. So your margin is very, very important. Now, the direct expenses does not include any operational expenses. So operational expenses are all the expenses not that are indirect and not directly associated with you generating money. So that could be, I use the example as an office. You may sit in the office and have computers and things like that, but whether you generate money or not, the office will still be here. It is not directly associated with you generating money. The same goes for the copier machine, any bank fees, professional fees, all those different things. If it does not impact your sales, it is not a direct cost. So other examples of operating costs would be, let's say, administrative expenses. So like payroll, if you have a virtual assistant, if you have an operations manager, those costs would be included in your operational expenses. Marketing is another good example. If you're just raising awareness about your business, then in general, then that's an indirect expense. Now, if you are running a campaign to push one of your products, then that would be considered a direct expense because it's directly associated with you generating sales. I hope that's clear. So if you take your gross profit margin and you subtract your operating expenses, you'll get your net profit or loss. So when you're going through the budgeting process and you're really mapping out and really taking an inventory of what all of your operational costs are and putting it in that operating expense bucket, taking an inventory of your direct expenses associated with generating your revenue. And then from there, those two together, right? Your direct expenses with your operating expenses, it will help you determine how much money you need to bring in to cover those two buckets. Any questions so far? I know I just said.
I had a question. I'm sorry, my camera's not going to be on today. Hey, Chantel, how you
It's
doing?
okay. Hi, Crystal. How are you?
Good. So I just want to clarify the operating expenses. So like indirect labor for me being a service-based business, could you just like go a little more in depth with that? Like
Sure.
what would that look like?
Sure. So if you have let's say a receptionist that answers phones, book appointments, she books the appointments, she may sweep and mop the floor, she may restock the shelves, refill the shampoo bottles and things like that. My sister just tells us something about all the things that she used to do or had someone do for her. You know, having them stock supplies, paper towels and things like that. Those are all indirect because they're not actually touching your client and doing anything for your client. They're not washing here or prepping them for you.
So those amounts minus the gross is what the gross profit margin is what creates the net profit. Just to make sure I'm reading this correctly, right?
That's correct.
Okay.
Yes, that's
Thank
correct.
you.
Of course, of course. And also in that operating expense, again, would be like your rents. So if you're paying rent for your salon or your office or wherever, it would go in the operating expenses as well. The utilities, postage, any lease expenditures that you may have if you're leasing any equipment, anything like that. Any other questions? So I just want to quickly jump to the in-class activity to kind of break it up a bit. So this will give us an opportunity to kind of play around with a chart and see how you would prepare a budget or even crunch some numbers at a very, very top level. So you can get a sense of what it looks like when you're preparing your numbers. Now, I know all of this, to some may be intimidating, to others like, oh, okay, I got a piece of cake, but it's really very straightforward. And I suggest that you start with very top level numbers, meaning just guesstimates, and then kind of drilling down and making them more realistic as you move on or as you become a bit more acclimated with your numbers and more familiar with them and more comfortable with them. So I'm gonna stop sharing this and switch over to the budgeting tool. I will also drop a link so you all can open it yourselves if you want to give it a try. I would suggest making a copy of it, so this way you're not going over someone else's version. So if you open it up and you make a copy here, so you can save your own version and crunch your own numbers. All right, So as I mentioned before, your budget really has three different buckets. You have your revenue, your direct expenses, and your operational expenses. In this budget calculator here, I added additional line items because as owners who have LLCs and take owner's draws, there are a few more steps or things that you want to consider. And that's like tax saving for the end of the year to pay your taxes, the amount of money you want to put to the side to reinvest into your business, and even building up a savings or reserve. So again, your revenue is the monies that you will have to bring in to cover your direct expenses and your operational expenses, also known as your indirect expenses. That money also needs to help you pay your taxes on your income, as well as you need to pay yourself, right? That's very important. Please pay yourself. You need to pay yourself from your business. So again, if you are LLC and you are filing as an LLC, a Schedule C, right? You are taking an owner's draw. You are not paying yourself through payroll. There is a big difference between the two. So paying yourself through payroll means that you are using a system such as Gusto, let's say QuickBooks Payroll, Paychex, ADP to pay yourself, and you are withholding taxes and you are paying employer taxes. If you are filing as an LLC, meaning a Schedule C with your 1040 form at the end of the year, you should not be putting yourself on payroll. You should be taking an owner's draw. So that means cutting yourself a check. That means taking money out the ATM or transferring money from your business account to your personal account. All right. The other part is, again, amount to reinvest. How much money do I want to carry over into the next calendar year? And the last piece is, again, the savings and reserves. So how much money do I want to put aside for rainy days for my business? Sales are low. I still have operational expenses that I need to cover. I have payroll. I have people that I need to pay. I still have to pay rent regardless of what my sales are looking like. How much money can I put in a reserve to the side to kind of get me through that low point in my cash flow, in my operating account? So we're going to fill out this calculator together. Feel free to chime in and throw numbers at me if you want to see what numbers may look like for you, or just want to play around with some numbers. This is really a step-by-step, like what you need to do first, second, third, fourth, and fifth. And if you follow this, you should be able to calculate how much revenue you need to bring in to cover your annual expenses. And again, this is very, very top level, meaning we're just plugging in the summarized numbers, right? We're not really drilling down into the itemization of what makes up that expense. So when I say itemization, I mean like the list of expenses that you have that make up the total operational expense number. So if your rent is, let's say, $20,000 for the year, you have $10,000 in salaries and another $10,000 in, I'm just making up something, I like using copier expenses, that's $40,000 in operational expenses. So you would plug in $40,000 here in your operational expenses. Okay, operational expenses. All right, so one thing that you'll need to determine is the percentage of your revenue, how much of it goes towards your cost of goods and your cost of service. So what's the percentage? And the way you determine that is taking your direct expenses or inventory plus your direct labor and dividing it by your revenue. So for instance, if you all should be in business right now. If you were to look at your historical information, let's say for the last year, and you take a look at all of the money that you brought in, right? And you looked at all of your direct expenses. So now you may not have been keeping track of your expenses as like direct expense versus operational expenses, but go through the exercise of saying, okay, here are all of my direct expenses. Here's all the inventory. Here are all the supplies I have to use to provide the service in order to generate revenue. Here's all the direct labor, meaning, any assistant that I paid or anybody that I paid in order to generate that revenue, making a list of that. If you take the total cost after you made the list and tallied it up and divided it by the revenue that you generated, that will give you your percentage. right? That will give you your gross margin percentage. So again, when you have a chance, make a list of all those direct expenses, direct labor, tally it up, whatever that number is, divided by the amount of money that you brought in for the same time period. And that will give you a percentage. So let's say the percentage is 30%. So it may show up as on your calculator as 0.30, right? So 30%. And that's the number that we're gonna just go with. All right, so I took a look at my revenue for the year. I took a look at my my direct expenses. All of my other expenses that are left over should be operational expenses, right? And let's say that number was $50,000. Now, this number should not include your owner's draw. That is not an operational expense. An owner's draw is you just simply withdrawing cash from the business. Owner's draw is not an expense of a business. Okay, it does not account as an expense, and the IRS does not see it as an expense. So this number here should include your rent, your utilities, insurance, administrative costs, office supplies, etc. So again, when you're tallying up all those numbers, just double check and make sure that it doesn't include any direct expenses, and it doesn't include any personal expenses, and it doesn't include any owner's draw. So say if that number came to $50,000, right? Going to go to my next step here. Well, how much do I want to pay myself throughout the year, right? I want to set a salary for myself so this way I can stay on target. I know how much I need to bring in monthly. Let's say I want to pay myself $50,000 or $60,000 for the year, right? That's the owner's draw that I'm going to take out. I'm going to withdraw about $5,000 per month from my business to pay myself, and I'm going to use that money to deposit it into my personal account and cover my personal expenses. As we know, we should not be mixing the two. We should have two separate bank accounts, right? Again, if you are filing as an S Corp, disregard this worksheet. It's good to know, but this worksheet is not for you. This is for individuals who are taking owner's draw. So how much money do you want to reinvest into the business? So say, for instance, I would like a balance of about $10,000 in my bank account at the end of every year, or take 10,000 of what I've made, right, of my net profit all the way at the bottom line, and have it in my bank account and reinvest for next year. So let's say it's $10,000. The next part is, how much money do I want to allocate to my reserve? So the reserve I was telling you about is the money that I put away in my savings for a rainy day. So me personally, I like to put about 2 months of my operational expenses in my reserve. So this is an annual operational cost, right? So let's say I took the 50,000 divided by 12 months and then times 2 months of the reserve, and that's how much money I'm going to put in my reserve. So I'll figure out what the percentage is, and let's say it's 5% of my operational costs. The last piece of this is figuring out your tax rate. So if you file taxes, which I believe you all should have, if you filed taxes in the past, on your tax report, you will see a tax rate, the tax rate that was used to determine how much money you owed in taxes. So if you look at the last maybe 2 or 3 tax returns, if there isn't a huge swing between them, right? You should see your tax rate and how much, and there should be, if you brought in about the same amount every single year, it should be on average the same amount. So let's say it ranges between 20 and 30%. Whatever that number is, you're going to plug in here in this box. Oops. Sorry. Okay. You notice as I was plugging in numbers and doing a whole bunch of stuff, no, this is not right. Why is this? Sorry, let me see here. I know it's right, sorry. All right, so as you notice, as I was plugging in numbers, the chart started moving, the budget calculator started, going up and down and moving around and whatnot. Really, this budget calculator is taking all the information that you provided using a formula and spat out a number, your revenue, and how much you need to generate to cover all of those different things. Any questions so far? You guys are very quiet. This is sorry, the most quiet I've ever seen in class. So when you're plugging
I'll
in
ask the
your
question.
Sure.
So just kind of want to get a better explanation in terms of calculating labor costs. I know many of us are we are entrepreneurs, and many of us are operating solo. So if you aren't paying yourself, like how do you calculate how much the labor expense is for your business, and when you're calculating it into the cost of goods sold?
That's a very good question. So my rule of thumb is how much would you pay someone to do that work for you? So let's say in when the time comes, because it will happen for all of you, you're no longer involved in actually providing the service, right? Or making that good to sell. You hire people for you. How much would you pay them to do it? So let's say, okay, well, if I had to hire someone, I would pay them $20 an hour. And it should, based on the work that I've been doing, it requires about 20 hours per week. That's what you would budget for, right? So if you know that, okay, in order to provide $100,000 worth of services, or let's bring it down, $10,000 worth of services in 1 week, and it requires 40 hours of my time in order to generate that $10,000 in that 1 week, then I'm going to hire somebody at 40 hours, right? And determine the hourly rate that I'm going to pay them. And you want to do some market research too to determine what's fair, right? What's out there. The job market is kind of weird right now, but if you want to take a look and do some research to determine, well, how much does it cost to hire, I don't know, X person, to deliver this service and put them on my team. You obviously want to make sure that, what you offer is fair, is competitive, but it's also within reason, right? What you can actually afford. And it doesn't impact your gross profit margin. All right.
Thank you.
That's a really good question. A lot of people ask, because you're doing the work, right? So how do you determine what you should be budgeting? So how do you, take a portion of your time and put it down on paper? That's a good question. Anyone else?
Yeah, I have a question. Could you please explain step one again?
What I just said?
No, step one, could you break down the like how do you get that percentage again one more time?
Sure. So I'll actually type it here in the spreadsheet. So say, for instance, looking at your historical information for your business, right? So some of you may be using a spreadsheet to keep track of your expenses right now. Some of you may be in like an actual financial system, so like QuickBooks, FreshBooks. There are many different platforms. Pulling the report for last year, and we're going to use last calendar year as an example. If you don't have any of those tools, go through your bank statements, right? You can download and export from your bank account and, play around with the numbers in the spreadsheet. You want to take a full year's worth of your direct expenses and inventory, plus your direct labor. So if you cash out people like consultants and stuff to help you do your work to generate your revenue, you want to count that in there as well. So say I tallied up everything and my direct expenses came out to $20,000 for the year. And my direct labor, I paid, again, Cash App, Venmo people. I have people on payroll actually helping me generate or, provide this service or sell these goods. Let's say that's another I'll use $30,000. My total direct expenses is $50,000. All right. And let's say I brought in my revenue, I tallied up everything, what I've charged for my services, all the money that I received, in addition to what I invoiced and hasn't been paid yet. Too, that's counted as revenue. So let's say I billed and generated 150,000, right? So we have the revenue. We have total direct expense. We have the cost of goods sold or cost of service. Oops. Oh no, I think this is labor. Right. And I brought that amount in revenue. If I take my direct expenses and I divide it by my revenue, it's going to give me a 33%. It's going to give me a decimal. So it's going to be, I have to put in the percentage. So it's going to give me 33%. So this is the number that I'm going to plug in here.
Gotcha. Thank you.
You're very welcome. Any other questions like this? I'm happy to work through any of these roles so you can have a visual. I'm a visual learner. So if you need any of this, let me know, because this is what this class is for.
I have a question.
Anyone else? Sure.
Would it make sense to account for in some way, based on your tax rate, the amount of taxes that you would owe, and have a portion of your revenues taken out per month, a percentage designated for that?
Very good question. Yes. So the tax rate here that we use was 20%, right? So you see here, 20% of my net profit is $120,000. So obviously this is extreme. Not really. If your company is this big and that's how much you're generating in net profit, you know, that's how much money you would owe in taxes, right? So that's how much money essentially you should be putting to the side every year. Now, if I wanted to chop this up over every month, based on the example that you're using. So say for instance, I'll work on 1 quarter. And I have my revenue, my cost of good, cost of service, my gross profit margin, my operational expenses, and my net, right? So say for instance, I'm gonna make these numbers very simple. I brought in $50,000 here. I brought in 30 here, and I brought in 20. My margin is 50%, so it's 25, 60,000, 15,000, and then 10,000. So my gross profit margin is here. So when I back out my operational expenses, which should be around the same every month, right? Like usually operational expenses are pretty flat unless you, again, have dues and subscriptions that come out once a year. You'll see 1 month jump up or whatnot, but let's say it's flat across the board. And let's say that amount is so if I take my gross profit minus my operational expenses, this will be my net profit, right? So the question is, how much money do I have to put away for my taxes or pay for my estimated taxes, which should be done on a quarterly basis, right? So if my tax rate is 20%, I know I need to pay 20% of this amount, which is $3,000. Oops. Sorry. That's how much money I will owe for January, $3,000. For the month of February, taking my tax rate. Come on, you. It just kind of wants to figure it out itself. Stop being wrong. For the month of February, I will owe $1,000. And notice here, let's say I broke even this month, right? Sales weren't that great. I don't owe anything. So in total for the first quarter, I would owe $4,000. And that's what I would remit to the IRS on the IRS website. So if you are managing your books on a month-to-month basis, you're recording all of your sales, you're booking all of your cost of goods and your operational expenses, you'll know what your net profit is for the month. And once you determine what that tax rate is, and if you don't know what your tax rate is, the default is between 20 and 30%. So either pick the low end or the high end, or pick in between 25%. Use a number, because what you're doing is just paying estimated taxes, right? All of that would be reconciled when you file your tax return. So you're using, let's say we're using the 20%. So my net profit is 15,000, 20% of that is 3,000. That's how much I have to send over to the IRS. For February, 20% of 5,000 is $1,000. That's how much I need to send over. And the IRS has a schedule where you're supposed to pay your estimated taxes. So it's usually quarterly, but it gets funky around like the summertime where it's like you have to make a payment in July versus August, something crazy like that. But I'm happy to forward those dates to you all so you have it, and I can do that in Slack. So for the quarter, let's say you're paying your taxes quarterly, you'll know, okay, $4,000. So if you're doing this monthly and you have a separate account for your taxes, you're putting away that 3,000 in January, that 1,000 in February, and no dollars in March. And when it's time to pay the taxes, the money is sitting there in the bank account, right? It's not mingled or commingled or mixed in with your operational expenses. Because again, what happens is we look at our bank account, we're like, oh, we have money, and we go and spend it on other things when in fact we should be putting that money to the side. Sandra, I see your hand is up.
Yes, I was just waiting for you to finish though, but I don't know. One of the questions, one of this you talked about was about spending. Last year I put away, I paid a large amount of taxes. This year, my accountant told me I have to put even a large amount, which I guess is a good thing and it's a bad thing. But I have an LLC, and with the LLC, I have been paying myself I've been paying myself a payroll, and you were saying that's not good. Can you please clarify for me why that isn't? Because I pay myself through payroll.
So the question I have for you, do you file as an S Corp or as an LLC when you file your taxes?
I believe I file as an LLC.
Okay. So when you file as an S Corp, yes, you should pay yourself through payroll. The IRS requires it. But when you file as an LLC, meaning a Schedule C, right? You complete a Schedule C for your taxes, for your business, then yes, you file. So then you are filing as an LLC, so meaning you should be just taking an owner's draw. So what happens is when you first off, the IRS views an LLC as almost like a official sole proprietorship, right? So as you know, if you don't have a LLC registered and you don't have a EIN with your LLC or your business, you are considered a sole proprietor. So if I go out and I'm a freelancer, I'm a photographer, I take pictures, I get paid money, and I declare that money on my tax return, I am viewed as a contractor or sole proprietor. But when I have a business like an LLC, because an LLC provides a layer of protection between you and your consumers, right? That's why we form these LLCs. So this way, if someone sues us, they sue the LLC and not us and can attack our personal assets. You are required, you are still considered as a sole proprietor, but the LLC just provides an extra layer of protection, right? And it is still seen as a business. So meaning you need an EIN number, you need a separate bank account, it generates revenue, it has expenses, all those fun things. But the money, your net profit, this bottom line here, this net profit, all of that money flows onto your personal tax return. So what came in and what went out happens on a Schedule C. That bottom line then carries over on your personal tax return. And then that's what you pay taxes on. Because it flows to your personal tax returns, that's why you are required just to take an owner's draw and not pay yourself through payroll. It's not seen as a corporation, meaning a standalone corporation where you have, directors and all those other things. So you have to take an owner's draw in order to pay yourself. Someone's coming in, to pay yourself and not through payroll. So now what happens when you pay yourself through payroll is that you're actually paying double the taxes than you need to, more taxes than you need to. So you are paying both employee taxes, and as the business owner, you're also paying employer taxes. So as employees, I think everyone here has have a 9-to-5 job, right? Or received a W-2, you know that the IRS withholds Social Security, Medicare, federal taxes, and then the state withholds state taxes. As an employer, you also have to pay Social Security and Medicare, also known as FICA, for your employees, in addition to FUTA, which is federal unemployment tax, and SUTA, which is state unemployment tax. So you're contributing to these two buckets, such as the FUTA and SUTA, when you don't need to. So you're actually paying money towards taxes that you don't need to actually pay. The advantages, well, I don't know what happens on the employer side, because I think that goes into a different bucket, but what you're withholding for your federal and state, you'll get tax credit for when you file your taxes. But this is something I'm surprised your tax accountant, I don't know if you file your taxes or your tax accountant brought to your attention. And I've actually heard this before. Someone else has done this before too, but go ahead. I see you were going to say something.
No, I was just saying, as soon as I get off this call, I'm calling him. I just wondering why I'm paying that.
Yes. So something I will cover later on, and I'm watching the time here. I think we probably have to move on. I'll quickly go over the S Corp tab and then we'll move on. I like to explain to people that, they're like, again, I'm managing my taxes because I work my tax accounts and I file my tax at the end of the year. Tax accountants, and no shade to them, and I'm not throwing them under the bus because I know a couple of them and I've had these conversations with them. They literally take your information, plug it into a worksheet and send your filing off, right? They're not saying, hey, I noticed that, you're spending money in this area. You may want to consider X. They're not telling you things that you should be doing, what you shouldn't be doing, what's allowable, what's not allowable. They really don't give that type of advice. They will take, and then some do, right? And if you found one, that's like, a gold mine, right? Unicorn. But there are those who just take your information and they plug it into the form and they send it off like, okay, this is how much you owe. This is your bottom line. And nowadays, everyone calls themselves a tax accountant. If they know how to use TurboTax or H&R Block, they will call themselves a tax specialist and they will file your taxes using one of those platforms, following the prompts, right? You want to work with someone who really knows the tax code, someone who really can actually strategize with you. You tell them what you have planned for the year, and they will tell you things that you should consider and keep an eye out for throughout the year. Any tax benefits or deductions that you can take advantage of. That's the type of advice that your tax accountant should be, or tax specialist should be giving you. If they're not doing all of that, then you may want to consider finding someone else, because that's what they're supposed to be doing. Okay. So the S Corp example is the same. So is there anyone, let me just check and see. I can't see everyone because I have my screen. Is there anyone in here filing as an S corp? So I know whether or not I should go over this. Okay, we do. All right. Hello, Crystal. So the S corp piece is similar, whereas you go through the step-by-step, right, examples here, and we'll just go through it quickly. The difference is with an S corp, you don't take an owner's draw. You can withdraw money from the business, but you don't pay yourself via owner's draw. You actually pay yourself through payroll. And the IRS requires you to do so. The IRS requires you to set a reasonable salary for yourself, for your industry, and you pay yourself via payroll, whether it be weekly, bi-weekly, monthly, one of those schedules. All right. And as I was just explaining to Sandra, when you're paying yourself through payroll, you're paying both employee and employer taxes. So as an employee of the business, you're paying employee taxes. So that's the federal, state, and then FICA taxes. And then as an employer, you're paying employer taxes on that employee, which is yourself, or any other individuals that you have on payroll. And you're paying FUTA, SUTA, and also FICA taxes. All right, so let's say your margin here is 20%. And if you're going through the worksheet or the same exercise as I used in here, kind of calculating your direct labor and your direct expenses, you will know how much goes in each bucket. So let's say here, desired salary. Let's say you want to pay yourself 60,000 a year. How much you want to reinvest into the business? Let's say and let's say my tax rate is 20. Okay. So this is what your calculator would look like. So going down, based on the entries that I made, my budget calculator is saying that I have to bring in about $250,000. My direct expenses are about $43,000 because $43,000 is 20% of my revenue. That means my gross net profit or my gross profit margin is 171 or about 172,000. My operational expenses are going to be 86,000. Now in this number is my operational expense here plus my salary and taxes. So these two numbers here plus taxes brings us to that $86,000. I have a formula in here that's adding the taxes to the 60,000. Okay, so those are your operational expenses. So you'll notice the difference on this first one. My payroll or owner's draw is down here at the bottom after my net profit, right? It's not a part of my operational expenses. As an S corp, it is an operational expense and it is something that I can write off and deduct when I'm filing my taxes. So that brings my net profit to 85,000. My taxes that I have to put aside are 17,000 for the year. So I'm going to put that away in a separate tax bucket. And that means my cash balance is going to be 68,571. I said, based on my calculator here, I want to put away, I think I have this set up, I have this as 5%. I think I have to put 0.5. I think I'm breaking my calculator here. I have to put away $10,000 to reinvest, and then I have to put away 50,000 for my reserves. So if you have a moment after the class, take a look at these, depending on your own personal situation. If you are taking an owner's draw, play around with this calculator. Again, go through the process of determining your direct expenses and your direct labor. Think about what you brought in, and that'll help you to determine what your percentage is, your margin is. And again, go step by step and plug in these numbers and just play around with the calculator when you have a moment. Okay. So I'm going to go back to the presentation. Are there any questions?
This may sound like a silly question, but I saw that you shared it on Google. Are we able to like save it, like save the document, or
Is it, you think that it would be like a live link is what I'm trying to say?
Yeah, sure. It is a live link. So what you can do, what I can do is download this for you and upload it to Slack. But if you want to keep it in Google Sheets, what you can do is just go to File and make a copy of it. And then you'll have your own copy saved on your old drive and you can just start punching in numbers.
Okay, thank you. Yeah.
At least
I'm
if you
not
save a
familiar
copy
with
of this. Oh, okay, okay. So do you have a Gmail account?
Yeah.
Okay, so Google Drive is free. If you have a Gmail account,
Mhm.
say it
I'm
again.
sorry. I think I was I was okay. It was just I just had a brain fart. You don't have to explain it. I got
Okay.
it. Thank you. I'm sorry.
Okay, got it. All right, got it. All right, cool. All right, let me go back here. Beans. All right, so we're going to jump into bookkeeping now. So after you've gone through the exercise of crunching your numbers, really determining how much money you need to bring in based on, your expenses, your projections of what you think it'll cost to run your business, you would now be responsible, and everyone should be doing this, for managing your bookkeeping. So bookkeeping is recording and organizing your financial transactions for your business, right? You can use softwares like QuickBooks, QuickBooks Online, Quicken, FreshBooks. I know there's like HoneyBooks out there. There are a lot of different types of platforms that you can use. If you're not ready to invest into a financial software like one of these, you can use a spreadsheet to keep track of your income and your expenses. I recommend that you only use a spreadsheet if you have about like 10 transactions about 10 to 15 transactions per month. After that, it's just going to get real complicated and you should definitely just invest in one of these systems. The simplest plan or the smallest plan with QuickBooks is about $25 or $30 per month. So if you think about, at least I'll speak for myself, the amount of money I spend in fast food, that's nothing. So I think we could all afford $30 per month. And it's a really good tool, very robust. It integrates with a lot of other different platforms. So it's definitely something to take a look at. So you have a tool, again, whether it be a spreadsheet or the financial software, and you want to keep track of all of your data, all of the information in the system. You want to keep track of your invoicing, all of your expenses, all of your activity, everything that hits your bank account and everything that hasn't hit your bank account yet, meaning any checks that you've cut, right, that haven't cleared the bank. Those are checks that you want to record in the system because you want to account for that expense. Whether or not that vendor or that person cashed their checks, that's on them, but that's still an expense to you as a business. Let's see. So the data that you put into the system, it sets a foundation for all of your financial reports. So think of all the data that you're going to enter into the software or into the spreadsheet, and it's going to summarize that information onto a profit and loss statement, onto a balance sheet, and on a cash flow report. So when you are applying for, let's say, grants, or if you're applying for a loan line of credit, the lenders or the donors will ask you for financial reports. And obviously the best thing what you want to be able to do is just click a button and have it spit right out. So it's nice to invest in systems like a QuickBooks, Quickens, or whatever to organize your information, be able to press a button and be able to furnish those financials in a timely manner. It also allows you to take a look at anything. Let's say, for instance, if you are spending a lot of money or paying for a lot of supplies and you took a look at your financial report and like, normally I spend about, let's say, $500 a month on supplies, but this month is about $1,500. It'll prompt you to take a look and see, well, why is that line item $1,500? Now, you may learn that, oh, I recorded something incorrectly. It's on the wrong line item. Or, oh, one of my staff members have been using one of my credit cards, right? And have been running it up and I didn't even notice. I need to do something about that. So if you're looking at your numbers, looking at your reports and just checking in, you can catch those type of mistakes or really respond to, again, the needs of the business. Financial report. Any questions about bookkeeping? I know I kept it real brief, but I want to really focus on the budgeting and the financial reporting. All right. So again, the financial
I have a
report.
question about bookkeeping. Do
okay.
you suggest, I'm sorry, my video keeps getting stuck. Do you suggest when it comes to bookkeeping that you should hire somebody to do it? Because right now I do my own bookkeeping, but I'm getting ready to, as you know, taxes, we have to have it filed by April 15th. And I have a CPA, which would be different than the bookkeeping. So would you suggest that before I give all my documents to my CPA, that I should hire somebody to actually go through everything and get all the stuff that's needed? Because I know my CPA is asking for like all the tax documentation, all receipts and stuff that I use towards my business. And that's a lot to gather. So do you think it's worthwhile to actually hire somebody to put all of that stuff together for you so that it's compiled and then I could just send it off to the CPA?
Sure, yes. So I'm a bit biased when I answer this question because my business provides bookkeeping services. And that's exactly the reason why, to be able to organize, compile this information so you can hand over a complete and vetted and, you know, clean financial report over to your tax accountant. So absolutely. And I also say too, depending on your budget as well, and the amount of work that needs to be done, if you know that it's going to take you a long time to go through all of those financials and it's going to take you away from generating money or making money, that doesn't make sense, right? So at that, it's they call it opportunity cost, right? It's an opportunity for you to delegate and spend money to get this task done so you can continue focusing on generating revenue, right? So if it's going to save you time and it's not going to take you away from doing your, it's going to help you focus on your work, then yes, absolutely. Hire a bookkeeper or have someone do the project for you and just sit down and go through your receipts and enter them in for you. It also gives you an opportunity to just look at everything and confirm your numbers and really respond to what you're seeing before you give it to your tax accountant or your CPA, if that makes sense.
It does. My second question is, you said your business does it, because I was just about to hire someone else, but I haven't yet. So can I have your contact information so that I can talk to you off of this to kind of discuss like your rates and kind of what you would do?
Absolutely, sure. So what I'll do is drop my link in the chat box.
Okay.
And I'll do it. I can't click out of this window, but before the end of class, I'll make sure the link is in there. And so you can, yeah, we can talk about the services. Not a problem.
Thank you.
Of course. Any other questions?
So
Yeah.
just put the link in so everybody else can see the link just in case.
Yes, yes. No, it's for, I'm going to send it to everyone and I was going to get to this at the end of class, but since we're on this topic, if you have any questions after this class, feel free to use that link and say, can you just use you as a soundboard right quick? I have a financial question. I'm happy to answer it. After the last cohort, I had maybe about 5 or 6 people who called me and they just had questions about registering their business officially because they were sole proprietors. They had questions about what they should submit with a grant or what they should get to lenders, various things. I'm happy to help. So use that link, even if you're not looking for services in particular, feel free to use that link to ask any follow-up questions after this class. Okay. All right. So let's see here. So financial reporting. And if I ask, hey, if you have any questions and I don't see you, just feel free to say, hey, Shan, I have a quick question, because it's very hard for me to see both screens at the same time. So financial reporting, it helps you monitor your income and your expenses. It's necessary for tracking your performance against your budget, and it helps you prepare for your tax filings and applying for funding. So as the example I used before is, okay, you set your budget right, for the year. You've gone through the exercise, you incorporated your targeted goals, you know how much money you need to make, you know how much you need to spend in order to make it, right? You want to be able to track that on a month-to-month basis. You want to take a temperature check, check your pulse, your business pulse, to make sure like things are running the way that they should be. So you're going to be running financial reports after you're doing your bookkeeping, right? You're going to be pulling these financial reports to check in to see what's going on. How much money did we make this month, right? How much money do we have to spend to make that money this month? How's my margin looking? So if I know my margin is supposed to be at 20% and I'm running my numbers and my margin, let's say it's at 15%, it's like, whoa, 15%, that's low, right? It should be at 20%. What's going on? Am I not charging enough money? Am I spending too much money? What's going on here? My numbers are not adding up. So that'll, again, prompt you to take a look and see, well, what happened? Did you forget to invoice someone? Did you not invoice enough? Was your price point incorrect? Then you will take the moment to sit down and really assess what happened, make any corrections that you need to make, and then proceed accordingly, right? You want to be proactive and you want to make sure that you are in tune with what's happening with your business. Your numbers will tell you all. Your numbers tell you a story. Your numbers will tell you exactly what's happening with your business. And if you're not paying attention to those numbers in the story and see what it's trying to tell you, you'll completely miss it. So again, if there are mistakes that you are making and your numbers are telling you that, hey, there's a mistake, then, if you take a look at it and you catch it, you're going to fix it and you then won't repeat it right throughout the rest of the year. So please take a moment to establish that budget and keep track of your expenses and monitor what is happening with your business. You don't want to, run all your money out and spend everything, and then you're left with what? To really pay for your operational expenses, to pay your staff, payroll, and all those different things. And next thing you know, you're pulling money out of your own personal pockets to cover your business expenses. For preparing for tax filings and for funding. So even though we're still in the pandemic, but not as bad as it was obviously last year and the year before. But I'm sure you saw on the news and even experience as business owners that it was very hard to get funding or get like the EIDL and the PPP loan because a lot of people didn't have their books together. A lot of businesses didn't have any bookkeeping, they didn't have any payroll records, they didn't have the information they needed in order to apply and get that funding. And as a result, a lot of businesses, especially BIPOC businesses, closed because of it. A lot of business owners like to do things under the table, cash only. They don't like to keep records. They like to write off everything on their taxes so they can reduce their tax liability. But because of all those things, they weren't able to qualify for the funding they needed to keep their business afloat. So it's very, very important that you bookkeep. It's very, very important that you keep track of your financials, your documentation, your records. So this way, God forbid there's another pandemic, I pray there isn't, but another disaster happens or pandemic, you're prepared to weather that storm. You have all your ducks in a row. You have all the information you need to get the funding you need to keep your business afloat and to kind of make it, to the end of whatever is happening at that time. Speaking to the tax filings a bit, I know for some of us, it's ingrained in our mind that we have to write off everything because we don't want to pay the government any money, right? Like write it off. What is that? Oh, I bought some Burger King, write it off. I bought this. I told you I use a lot of food examples. I purchased this, write it off, purchased that, write it off. But what happens is when you are writing everything off and you're reducing your bottom line, right? Your net profit, and you're not showing that your business is profitable, when it is time to apply for lending or have someone invest in your business, it's going to be hard to do that because they're going to see that your business isn't profitable, right? They're going to, well, why should I lend you any money if for the last 3 years you haven't brought in any money? How can you guarantee that you're actually going to pay me back? It kind of looks like your business is a hobby if you're not generating any income. And some people do that. They create businesses to take a loss to offset their income to reduce their tax liability. Some people do that. So you want to make sure that your business is official. You want to make sure you're capturing your revenue. No one likes to pay taxes, fine, but you have to think of the long-term gain, right? I want to grow my business. I want to be able to get the lending that I need to scale my business, to invest or buy, big things of equipment, $50,000 worth of equipment. I'm going to need that lending, right? I need that capital infusion. But in order for that to happen, they need to see that your business is profitable, and you have a positive trajectory, right? So that's very, very important. I like to mention that every time I give this presentation, because there's this, again, for some reason, I understand why no one wants to pay taxes, right? But in the long run, if you're serious about your business, it's going to hurt you or hinder you from getting the funding and, the support that you need. Yes, Sandra.
So this is my last question, I promise you.
You can ask as many questions as you want, please.
How, I have a 7-figure business and I have a 6-figure job. The issue with that is how is it? Because it's beneficial, because every time I kept my job based on the reason that I have put so many years in it and I'm on the tail end, and I want to be able to get my all my benefits from my job because it's a federal job. The issue with that is I feel like I'm paying more out to the government than I'm actually gaining because of that, because I'm a sole proprietor. And I feel like I don't think I see the benefits for me personally. The business, the numbers all look good, everything, but I'm just paying and paying and paying. And I just feel like I want to give it up because I'm just paying. Because the whole idea was, when I started the business, was because of the job I have. I've always done it like on the down low type of thing. I've always done it for 20 something years on the down low to get money to travel. But then when the current job I'm in the federal government put me in the crosshairs of management, I said, okay, I'll start this just in case I got fired. And then it took off. That I had to make it into a real brick and mortar business. And so now I'm paying so much. I sometimes I'm like, I'm not seeing the benefit because I pay so much. Give me some direction, because I'm really confused. Because
So
you're making money, but you're not making money.
Sure. So I like to make the disclaimer, and I should have made this up front. I usually do. I'm not a tax specialist, right? But I know enough to know that based on what you're telling me and what you've shared so far, the fact that you're bringing 7 figures and your LLC, those don't match. You should be filing as an S Corp. And when you're an S Corp, you can take advantage of more tax savings. There are all these but it's a whole new world in the S Corp world. There are all these tax incentives that you can take advantage of when you file as an S Corp. So that's the first problem. And that's probably why you're spending more or, paying more money in taxes than you probably need to. So that goes back again to the type of tax person that you are working with. Are they a tax professional that's plugging in numbers into a worksheet and sending it off? Or are they strategizing with you and say, hey, your revenue looks good. You may want to consider moving from the LLC to an S Corp. And here's why. Here are all of the incentives of being an S Corp. And especially if you're already paying yourself on payroll, right? You might as well make that transition. So when we meet, I will also connect you with accounts. Amber White no, it's not what accounts, Whitehead, Amber Whitehead. She's in Windsor, and she's big on that. And she has like a rule of thumb for S corps, and she can tell you all of the benefits that you can take advantage of. So that right off the bat was at the top of my head. Is that the way you're filing is probably not.
Okay. Awesome.
I think she accidentally left.
Oh,
Oh, yeah, I see that. Let me see if she might have accidentally.
If
I'm
she's
checking.
using headphones, that happens to me.
I'm still here, I guess. So.
Yeah, I'm checking to see if she logs back in so I can admit her again. Don't see her yet. I hope she didn't have any sort of outage or anything, because that could do that too. While we're waiting, let me see if I can get her via email. 1 second. Huh? She just emailed me. She said her computer just shut off. Okay. Okay. Technology. Gotta love it.
Yeah.
There she is. Okay. She's back. There you are.
Well, that was crazy. My computer was just like, nope, I've had it. I was like, what? That has never happened before. I'm so sorry. That's
okay.
crazy.
Technology. It's good. We're all good.
I know. That was crazy. It's probably, done with me. Can you give me permission to share, please?
Yep, I sure can.
I'm running into the ground with all these meetings and presentations. All right. Let's see.
Should be coming up for you.
All right. Thank you. Sorry about that, guys. That was crazy. All right. So I think I was talking about Amber Whitehead. I will send the information, and I think I was moving on. So, all right. So financial reporting. I'm also watching the time here. So I will kind of zip through this because I want to make sure I have enough time for questions at the end. So an income statement, you'll notice that this example that's here on the screen is similar in a similar structure. Is structured similarly to what we were going over when we were building out the budget, right? So you have your sales or your services, if you're a service provider, your cost of goods or cost of service, and your gross profit. And then you have operating expenses. So you have, again, your rent, your admin expenses, bank fees, copier leases, all those different things. Selling expenses. Usually selling expenses are like your sales reps or any marketing. Some companies break it out this way. It's not necessary, but some of them do. Your administrative expenses. So if you are paying yourself through salary, it would show up here, or any of your staff that is on payroll. And those are your total operating expenses. So your gross profit margin minus your total operating expenses will give you your income from your operations. Some businesses, everyone structures their financial report differently depending on how big your business is and how you file, whether you're a corporation or not. So some of them will have the interest that they pay on loans below the line. And sorry, below the line. And so you'll see in this format, some of us, if we have like lines of credit or paying interest on a credit card, it would be included in these, the administrative or operating expenses. So if you take your 90,000 minus your 10,000, you have your pre-tax income. And then if you have your income tax at 25%, you're taking out 20%, and then you have your net income. And again, if you are filing as an LLC, this is what you can pull from to pay yourself, that's $60,000. And obviously this is an annual income statement. So if we were to spread this over 12 months, that 60,000 would look more like 12,000 a month. Okay. So your income statement, again, you have your direct service and sales minus your direct operating expenses. This income statement, as I mentioned before, it'll help you control your spending. So you're taking a pulse, you know what's going on with your business. You're using it to track it against your budget, and you're monitoring your profit margin and your net profit margin. Your balance sheet. So this is a report that a lot of, I've noticed talking to different business owners, a lot of them or business leaders in general are not familiar with the balance sheet. So we spend a lot of time looking at the profit and loss, seeing what comes in and what goes out, but we really don't pay a lot of attention to the balance sheet, and a lot happens on here that we should be paying attention to. So really what a balance sheet captures is our assets, liabilities, and our equity. For our assets, we have our cash accounts, our accounts receivable, and our property. So the cash accounts could be your bank savings account, your bank checking account. Your accounts receivable is who owes you money, right? So if you invoice someone $1,000, you'll see your accounts receivable at $1,000 plus anything else that's outstanding. And then any property. So if you have a car for your business, as your business owns a car, if you have a ride sharing company, you'll have multiple cars. If you, let's say, own a building, you purchase a building, you'll have that's listed as a property, copier machines, computers, those different types of things. Those are all considered as assets. Liabilities. So your liabilities are your loans, your lines of credit, your credit cards, your accounts payable, meaning what you owe to your vendors or anyone else that provided you a service and they sent you a bill for, that's accounts payable. And any unearned income. Unearned income is when someone pays you in advance for a service that you have not delivered yet. So they may have given you a deposit on something for a service that they give you a deposit in April for a service that's going to be rendered in November. That's an example of unearned income. You can't record that as income earned because you haven't provided the service yet. So that's considered as a liability. And if, let's say, something happens, you can no longer provide that service, well, you have to return that deposit to that person, right? And that's why it should sit on the balance sheet, because that's money that's just kind of hanging out there until you provide the service, and then you can recognize it as revenue. And then you have your equity, which are your assets, this first part here, minus your liabilities. And really, and then this is where you also record your owner's draw and your common stock. So if you were to go to an investor or even a bank, this is a report that they take a look at in addition to your profit and loss. Your profit and loss only tells you a part of the story for your whole business. So the profit and loss tells you what is coming in and what is going out. Your balance sheet is really going to tell the bank or the lender or whomever, well, what's your financial position, right? Do you have more liabilities than assets in your business? Meaning, do you owe more money than the actual assets in your business, like the actual amount of cash, receivables of outstanding invoices that are out there, the actual property that you have that can be liquidated and turned into cash? If that's the case, then they look at you as a high risk, right? Because if you were to close your business and you were no longer able to run it, you have all of this outstanding debt that you would have to pay before you can even pay them. So when they're looking at this, your financial position, they're taking a look at, well, how much debt is your business carrying compared to the amount of cash or assets that you have available. Okay. Now, it could be the reverse. Your bank accounts could look really good. Your receivables are healthy. You know, you have a balance at the end of the month, but people are paying within 30 days. You have property, you have a building, you have cars, you have all these things under your business. And your liability is less than that, right? Less than your assets. Well, they'll say, okay, well, you actually have capacity, right? You have cash capacity. You have enough assets to cover your liability should you need to liquidate and close your business, and you will still walk away with cash in your pocket with some type of asset, right? They want to see that and they want to know that. That's important to them because, again, if they lend you money, will you be able to pay it back? Now, some of us may ask for lending in order for us to generate revenue. And that's where the business plan comes into play for us to really share what the plan is. Hey, if I get this cash infusion, here's how it's going to help me bring my business to the next level and help me generate more cash. And with that additional cash, I am able to still run my business and pay you back. And you will show that in your cash projections, which is this report. So your cash flow statement really shows the activity of all of the cash going in and going out. Now you may be saying, well, isn't this your profit and loss statement? Actually, it's not. Your profit and loss shows all of the revenue that you've earned, right? You've invoiced someone $50,000. That's what shows up on your profit and loss. You've paid out, let's say $20,000. Those are all your expenses. The net between the two, your revenue minus your expenses, is $30,000, right? That's your net profit. However, even though you billed $50,000 worth of services, doesn't mean you've actually received in cash $50,000 worth of services, right? So that's your accounts receivable. You've invoiced all these individuals, right? You provide services, but only half of them actually paid you so far. And you know, you need to call like, hey, how you doing? How's the family? Just following up on that invoice. I'm not sure if you received it, right? And now you're calling and wondering where your money, where's my money, right? You want to get paid. But you see on your P&L like, oh, okay, I've generated and earned that revenue, but cash wise, I haven't received all that money. That's what the cash flow statement is going to tell you. Like, hey, here's your bank balance at the end of the month. And here's how much additional cash actually came in. So let's say you invoiced 50, but only $20,000 of the invoices were paid. Well, you only brought in $20,000 in cash. And that's what's going to be added to your cash balance. And then you have to start deducting everything that you've spent throughout the month. You were paying for leases, you were paying for mortgage. A mortgage is not an expense, right? A mortgage interest is an expense, but a mortgage isn't. So if you're making a payment for your mortgage, that doesn't show up on your P&L, but it will show up on your cash flow as money going out the door. So your cash flow statement shows all of the cash activities, everything that hits your bank account, and it accounts for everything that is an asset, a liability that you may be paying down on. And it also captures all of your revenue and your expenses, actual money you collected and any expenses that you've paid. Again, lenders and investors like to see this because they want to understand how your cash is flowing throughout the year. So I use an example of going to a lender and asking for a cash infusion, right? Like I would like to borrow $50,000 and here's what I'm going to do with it. So they're going to say, okay, well, let me take a look at your cash flow. I want to know if I gave you this $50,000, how does that impact your cash flow? How does that impact the seasonality and flow of your cash? I gave you $50,000. You already had 100,000. I gave you 50. Now you have 150. If your monthly expenses are 50,000, right? You're going to chop away 50,000 a month at that 150. But they want to know, well, what you're bringing in to replenish that. Is that enough? Because if that investment that I make is helping you generate more to increase your cash position, they want to see that on your cash flow statement. Again, they want to know at any given moment or when it's time to pay back that loan, your cash is going to be in a healthy position to be able to pay them back and still run your operations. So your cash output will go from, let's say, 20,000 a month to now 5,000 a month, because that's how much monthly you have to pay back to your lender. You need to be able to cover both of those expenses, or the cash outflow. I hope that makes, this is the most complex report ever. Even CPAs or certified hate this report, you know, but it's so important. This report will tell you so much about a business. And the 3 reports collectively paints the entire picture for the business. Your profit and loss, your balance sheet, and your cash flow statement. These are all 3 reports, especially if you're at a point in your business where things are just moving and going, to check in and see, well, what are these numbers telling me? Comparing them to historical numbers. Looking at the 3 trailing months, right? The last 3 months, all right, the cash balance has been good. All right, have we been paying everything on time? Am I missing any bills? Like, it looks like I have more money in my account than I should, right? Like, these are the reports that you're going to check in and make sure that you're paying all of your vendors on time. You're paying on your mortgages, your lines of credit, your credit cards. You're not missing anything. Or you may be saying, well, my cash balance has been really low, or I feel like I'm just like barely making it at the end of every month. Why is that? Like, what am I missing? Your cash flow, or all 3 reports, is going to help you figure that out. So I charge you all and encourage you all to take some time to even look at different financial reports, watch videos, YouTube. I hopefully, prayerfully, will be coming out with a series later on this year to dive into each of these reports, and even dive in even further into each and every one of these different parts of managing your finances, from the budgeting, doing more hands-on work with that, to the bookkeeping, to the financial reporting, and not so much tax filing. Like I said, that's not my jam right there, but we will speak to it. We will definitely speak to it. All right. So the last and final piece of this is the tax filings. So we touched upon this in various parts of this presentation, but just to kind of pull it all together, federal, state, and local require the individuals and businesses to file their taxes. It ensures that they remain in good standing. All right. So again, if you are a sole proprietor and or you have an LLC, you will file a 1040 for your individual tax return as an individual, plus a Schedule C for your business. Even if your business is not registered, if you are paid as a contractor or freelancer, you still complete a Schedule C. And again, that bottom line number on your Schedule C carries over to your 1040 form as an individual, and that helps you determine how much taxes you have to pay or how much you owe in taxes. All right. If you are an S Corp, right, you registered your business as an S Corp, or you are an LLC filing as an S Corp, you made an S Corp election, you will file an 1120S at the end of the year. And with this, if you are filing as an S Corp, again, you should be paying yourself through payroll. You set a reasonable salary for yourself and you pay yourself through payroll, either on a weekly, bi-weekly, semi-monthly, or monthly basis. And if for whatever reason the IRS needed to audit you, they want to see that. They want to see that you're paying yourself on payroll, and then that your salary is not jumping and going up and down throughout the year. It's, you know, you may give yourself a raise here, fine. You may have to take a dip because things have changed, fine, but every month it shouldn't go hopping up and down. If you have to make 2 tweaks throughout the year, that's reasonable. Other than that, it should remain flat. If you have employees, right, you have employees on payroll, by January 31st of every year, you should be issuing a W-2 form to them. So that's like a tax statement. That's a statement saying, here's how much money I paid you, you know, in 2021, because that just passed. Here's how much money I withheld in taxes for your federal, your state, for your Medicare, and Social Security, also known as FICA. And they use that information to file their own personal taxes, which is the 1040 form. if you work with contractors, whether you cut them a check, whether you pay them cash, whether you pay them via Venmo, Zelle, Cash App, and all the other fun platforms that we use, you should be issuing them a 1099. Unless they come to you and say, hey, I file as an S Corp, I don't need, or I am a corporation, I don't need a 1099. Fine. But if you are paying someone to provide services, you should be issuing them a 1099. And this is especially important if you are writing off as an expense in your business that you are paying contractors or consultants to provide services, right? Well, if you are paying contractors and consultants, well, where are the 1099s that you issue them? Where's the statement certifying that you've actually, these people are real and that you've actually paid them, right? These are real individuals and you've actually paid them. So this is a legit, so you need to tell the IRS, yes, this is a legit expense that I'm writing off because I've actually paid all of these individuals to provide the service. All right, so make sure those are issued as well. And those are due by January 31st. And even those past the January 31st, the IRS is still accepting them. So if you haven't done it yet for last calendar year, you still have time. I believe you have until April. You still have time. Try to get it done. If you're using a platform like a QuickBooks or FreshBooks or whatnot, they have a feature where you can actually prepare your 1099s in the system itself. If not, you can go online and there are plenty of different platforms you can use to file the 1099s. All right, so filing your taxes pretty much certifies your financial reports that you share with lenders, investors, and donors. So if you've ever applied for a grant, you'll notice that they'll ask for your financial reports and your tax filings. We want to see your Schedule C. May not ask for the whole, the whole packet, but they may ask for that Schedule C. They want to confirm that you've declared to the IRS that you've in fact made that amount of money that you are representing on your financial report. So if I say, okay, well, I gave them a financial report for 2021 and I brought in $100,000, my expenses were 50, I made a $50,000 net profit. They want to see those same numbers on my tax form. Because no one will ever say, yeah, I made 50 grand, right? Just voluntarily to make it match numbers that are not real on their financial report and end up paying more taxes than they need to, right? If you are paying taxes on the net profit that you are declaring to the IRS, then that confirms like, okay, well, this financial report must be real and these numbers must be real because that's what they, declare to the IRS and they pay taxes on that money. Okay, the two match, I've certified it, it's good. So you want to make sure those numbers always jive. You want to make sure you review those numbers when your tax specialist is preparing your taxes. You want to see a draft before they hit send, because ultimately you are responsible for what goes to the IRS, not them. You are declaring that these are my numbers, they are legit, I reviewed them, and I'm sending them off. So anytime you have your tax, your filing completed, make sure you get a draft, you take a look at it, everything looks good to you. You've been able to compare to the financial report that you've given your tax specialist. All right, everything jives. Oh, what's this? And ask questions. It could be a typo. It could be a deduction you don't understand. It's an opportunity for you to learn more about the deduction that they're giving you. It'll give you the opportunity to ask more questions and understand what is actually happening, right? Taxes are very complicated. Another reason why I never became a CPA or tax specialist. I was very clear that I like the nuts and bolts of accounting, but I didn't want to touch taxes. But it doesn't mean that we should only rely on someone else's expertise to do that work for us. We need to actually learn ourselves and at least to some extent understand what is going on. Because at the end of the day, that falls on you as a business owner and as an individual and not on that person. Okay. And finally, you will be penalized and fined if you don't file your taxes. So sometimes we wait past the deadline to file it. We forget about it. We don't want to deal with it. We don't want to pay taxes, all those things. File it anyways. If you know you owe money for your taxes, file it anyways and work with the IRS to establish a payment plan and pay a portion every single month. You may want to work with a specialist like Amber, who can actually help you reduce that tax liability. And she will call the IRS as an enrolled agent and work with them and say, hey, my client can't afford, to pay this $50,000 bill. And she used an example. I think they owed 20, she had a client that owed 25 and ended up walking away paying like $300 at the end of the day. I don't know what she did, but that's her world, and she knows how to navigate that, right? So just stay compliant, file your taxes anyways, and figure out a way to either get on a payment plan or work with an enrolled agent to help you navigate all of that and just say, I just simply didn't know and I can't afford to pay that. What are my options? But you always want to be in good standing with the IRS, because having tax liens and all of that will mess you up long-term when it's time to apply for various things, whether it be personally or for your business. So when you're not filing the business taxes, again, that rolls into your personal tax, and that hinders you and affects you personally. So never look at your business as one thing and you as a person, they're together, especially if you're an LLC. All right, I said a whole lot these 2 hours, and I'm happy and I appreciate you all sticking in with me and hanging in there. But just a quick recap, remember to create a budget. So this way you can capture your planning goals for the year. And remember, your goals should be scary and hairy, right? If you set a goal and it's like, oh, okay, I can accomplish that, revisit that. You want to continue to push and challenge yourself as an entrepreneur, as a business owner, right? And see how far you can go. So your goals should be scary and hairy, and you should build a plan to help you achieve that goal, which is your budget. Take time to understand your expense buckets. Understand your business. What expenses are required for me to run my business? Am I spending too much in these expense buckets? Should I be working with different vendors or shop around? As a rule of thumb, in many nonprofits, I know this is not a nonprofit world, but nonprofits, they always get 3 bids for any type of service that they're looking for. I encourage for-profit businesses to do the same. I have seen so many proposals come through in various businesses that I've worked with where they're looking for, let's say, social media services. Someone is like, oh yeah, $2,500. And someone will provide them with the same service and even better quality for like $1,500, right? But if you don't shop around, you would never learn about that service provider that's only going to charge you $1,500 to do the same thing. That's being a smart entrepreneur, right? Shopping around and seeing how you can cut these costs. Because at the end of the day, you reduce those costs, that's money back into your pocket or for you to reinvest into your business. Do your bookkeeping in a timely manner. If you can, set up like a Finance Fridays or do it once a month. It's like, all right, I'm gonna block this day off on my calendar. I'm gonna sit down and I'm gonna get all these things done. It is time consuming, right? And it's just like, it's like a chore. It's like laundry and dishes and everything else. Like, oh, I don't wanna do it. And if you're not a numbers person like me who enjoys it, it's like, I don't want to be bothered, right? It's not fun. But find time to do it and understand your numbers. And even if you're not managing your bookkeeping, find time to still sit down and look at the financial reports that your bookkeeper is producing for you and ask questions. Understand what is happening with your business. Make sure you store your important records. If you have a filing cabinet or an accordion file, keep your records. The IRS requires you to keep those records for about 7 to 10 years. Payroll records, contracts, receipts, all those different things. Scan your receipts if you can, because they fade over time, right? So 7 to 10 years sitting in a folder, they will fade. So we all have access to like Google Drives or Dropbox or these different cloud services. Scan your receipts and then upload them. And as I mentioned before, take a look at your financial reports to know what's going on with your company and its performance, and really determining what you need to do to respond, right? What does my business need from me? What should I be looking at this time? And as a friendly reminder, file your taxes on time. Even if you know you may owe money, file them anyways, and then figure out a game plan afterwards. Because if not, if you don't file for 1 year, it's just gonna, right, snowball from there, and then you're really gonna have problems long term. All right, that is it. Any questions for me?
I
Love
don't
the clock.
I don't have a question. I just wanted to say thank you so much because this is the side of business that I like despise. So I just appreciate you going in into detail and taking the time to share all this good information with us.
Of course, it's my pleasure. And this, I really enjoy giving these presentations. And a big part of what I do is more about the teaching, right? Like it's one thing to provide a service and do it, but I feel like there are always teaching moments. And I like to work with or partner with them, right? Business leaders, and actually show them what is going on and teach them. Like knowledge, goes a long way, right? That's one thing no one could ever take from you. So if you can build on that and your experience and put those tools up under your belt, and if I can help with that, then I feel like I've done my service here, done my job. Any other questions? I know I have to give you all a link, which I'm going to drop in the box now. You are very welcome. Thank you, guys. So I put my link there. Feel free to schedule that call with me if you have any follow-up questions. If you need anything else, I'll be here. And again, even if you're not looking for services, if you just have questions or just like, can you just help me work through this? I just need help thinking through this for a second. Schedule that meeting and call me. I'll be more than happy to meet with you and help you. Okay. All right. Thank you, guys. I really appreciate your time. And I will see you around.
Thank you.
Thank you
Thanks,
again for
Chantel.
having me. Thank you,
Thank you
guys.
so much.
It's good seeing you. Hi, Don. So you come in. All right.
Thank
Take
you.
care.
We'll reconnect
Bye-bye.
later on.
Yes, definitely. Sounds good.
Thanks, guys.
Bye,
See you
guys.
next session.
Yeah.